Is the Richmond, Virginia housing market getting ready to crash? Or is it going to crash? That's what we're going to be talking about in today's video. Make sure you stick around to the end, where I'll be sharing some special stories about particular clients that bought a house right before a crash. You're not going to want to miss it. Hey guys, I'm Erin, and if this is the first time to our channel and you want to learn everything there is to know about living in the Richmond, Virginia area, hit that like button, hit that subscribe button, and make sure you ring that cute little bell so you're notified every time we release new videos. All right, so the question that is on everyone's lips right now that I hear on a daily basis from past clients, from family, from friends, from anyone that figures out that I'm a realtor. The market in Richmond's getting ready to crash, isn't it? The housing market. And I like to talk to everyone about that and not bury our heads in the sand and act like, oh no, everything is sunshine and roses and everything is going so well and nothing is ever going to go wrong. Let's talk about all of that. So most important about anything, when anyone starts talking about these things, it tends to be at very pivotal times, and there's certain telltale signs that you're looking for. Now, everyone might look at things and go, oh, the telltale signs are there. Erin, you can say whatever you want because you're a realtor. You're always going to say, it's a seller's market. It's a great time to sell. Or you're going to say, it's a buyer's market. It's a great time to buy. I've sold since 2001. And I've sold a great number of homes in every kind of market that there is out there. And I can honestly say to you today, I understand why people feel the way they do right now. I understand why people are nervous. I understand why people are frustrated. And I understand why people are a little bit scared and nervous that we are on the verge of a housing crash in Richmond, Virginia. So let's talk about why we may be and why we might not be. So one of the big things that you're always going to be looking at, and again, we don't have a crystal ball, but it's why are people talking about things? And I think the biggest thing, as it always is the media and the headlines. You just see something every day. They're talking about several different things, which we're gonna touch on. Inflation, the rate of acceleration of everything appreciating, people bidding up on the housing prices, the shortage of inventory, there not being enough houses, the interest rates going up, all these things that we keep on hearing all the time. But I want everyone to kind of step back and really look at things objectively the way I would whenever I'm talking to people about their fears and concerns and deciding if now is the right time for them to buy or if now is the right time for them to sell. And the key thing that we always look at is when you look at headlines, what are those headlines supposed to do? What are they supposed to do? And what they're supposed to do is they're made to terrify. They're made to sell stories. And bad news and scary stuff, unfortunately, that's what sells. But I don't want to be a Pollyanna. I don't want to think everything is perfect and that I don't understand why people feel that way. So let's kind of touch on each of those different factors. A big thing that we're talking about right now is, the interest rates going up, and 100% they've been going up. And let's face it, everyone in the industry, everyone outside of the industry has said, hey, the rates are going to go up at some point, and it's happening now. And I think a lot of people had kind of taken the mentality of the boy that cries wolf, that they're like, they've been talking about forever, it's never going to happen. Well, now it's happening. So people are freaking out a little bit. And a lot of people, though, to me, though, are like, oh, this will be really good, though, because it's going to push a bunch of people out of the market because they're not going to be able to afford a house. The interest rates are too high. And maybe that's going to make things easier for me to get a house. And how that relates to the possibility of there being a housing crash, if there being a softening of the market. All of a sudden people blame way too many houses out here. So let's really look at that and talk about it. Traditionally, when interest rates go up, and let's talk about what is a high interest rate. I can tell you personally, when I bought my first house in 2000 with the lovely help of our family that helped us all out, we put 20% down. Our interest rate was 9%. So if we're really looking at things and comparing apples to apples, with how the rates looked right before the crash before in Richmond and how they look now. Yes, the rates are higher than they've been in the past few years, but are they still traditionally lower than they have been in many years? And the answer is yes. Even if the typical interest rates, as we're seeing them kind of pop up a little bit now, go over 5, that's still substantially less than what I paid in 2020. In 2000, I'm upping it up now, being crazy now, and that was 9% and putting 20% down. Think about how things were right before the crash, which really wasn't until September of 2008. So there was a lot of stuff going on there before then leading up there, and really now looking back, the signs of a market correction, of a crash coming, were there, now that I know what to look for. So back to those interest rates. Think about if you've ever talked to your parents about buying a house back in the 70s or 80s. And I bet they will tell you about the interest rates then. Well, they were in lines with credit cards. Most people will tell you like, oh, my house, the first house that I bought and I was so excited to get it, they were in the 11, 13, 15, 18% interest rates. So let's really put into perspective high interest rates and where they are in comparison to how they've been. And we'll touch back about why that, bringing up the 70s and 80s, why it's really important to look at that in regards to how that plays into the possibility or the signs of a housing market crash in the Richmond, Virginia area, okay? But back to the interest rates, the big thing that's on everyone's lips right now. Is that gonna push people out of the market? Sure. Is it gonna be pushing the buyers that probably need to be pushed out of the market in Richmond? And the answer is yes. If you are that dependent on a rate, you're probably either looking at homes that are too expensive or it is not the right time for you to buy. And I have no problem with telling people that. You want to avoid housing crashes, keep in line with what they've been doing in lending guidelines right now. Keeping things a lot more moderate and needing to hit certain guidelines in order to do things. If you can't afford an interest rate right now, it's better for you to wait and keep on renting. I will tell you that, and that's gonna help with our housing crash, with there not being a housing crash in our area, for sure. Let's talk a little bit also about some of the other factors that people think are going to play into the possibility of a housing market crash in the Richmond, Virginia area. And that has to do with the other thing everyone's been talking about, inflation. So again, we don't bury our head in the sand because we are practical people and we want to move forward and we don't want to do dumb, stupid things that may have happened in the past. Inflation is higher right now than it was in the 70s and 80s. And I think it's really important for everyone to know that. How that affects housing markets. Everyone might say, hey, when inflation was very high back in the 70s and 80s, it absolutely affected a housing market in the Richmond area and across the country. You're right, but here's something to kind of keep in mind. Always make sure you're looking at the information and not just going to that knee-jerk reaction of, oh, it's the same, it's going to happen. How was the housing market? I wasn't selling then, been selling a long time, not that long. The 70s and 80s, was the housing market great? It wasn't, but there were a couple different factors that were all also playing into that as well. And you might say, oh, interest rates were high. It's the same, we have a housing market coming. Yes, interest rates were higher. This is true. But actually, when you look at things statistically through time, during high inflation times, one of the things that does the best and where people want to invest their money because it works the best for them is in real estate. Because during inflationary times, the non-tangible things or the less long-term things are the things that are affected the most. Food, gas, all of those different things, and definitely 100% rent prices. You think those are going down and aren't affected by inflation in Richmond? You are dead wrong. If you think the interest rates and the housing prices are expensive in Richmond, you haven't looked at the rental rates. So again, looking what's so important. So even during the high inflationary time, people like to invest their money in real estate because it tends to do well for them over time. Sure, everyone knows that there's going to obviously be a calm down of the market in Richmond as time goes on, for sure. But there's one big predictor where it's different from where we are now to where things were during another high inflationary time, and that has to do with inventory. 70s, 80s, It's supply and demand. There were more houses than there were buyers. That is complete opposite of where we are today. We have more buyers than there are houses. We get several calls every day from people just like you looking to move to Richmond, Virginia and looking for a real estate team to help them. If that is you, we would love to be the team to help you out. All of our contact information is below the description. All right, so let's get back to that other thing that is a big factor that plays into whether we are on the verge of a housing crash in Richmond, Virginia. And that has to do with inventory. So let's go back and kind of compare some of these times that are very similar, okay? Back to the 70s and 80s, a little bit further, and then we're gonna bring things forward to where I can really bring it full circle to you and talk to you from personal experience about when I've been selling properties and during the different housing markets. So inventory, during those other high inflationary times, the inventory was very high, whereas right now, the inventory of houses is very low. And there's a couple different factors that really play into that in Richmond, Virginia. For one, when we went into the housing crash before, right, there was an overabundance of homes. And that always is what plays into with anyone, if anything shifts, where there can be a crash and a problem. Now, really, when you talk about the housing crash, that was so above any one of our heads. The realtors, the buyers, the sellers during that time. That we were like cogs in the wheel. We were puppets in the bigger play of all the ucky stuff that was going on. So keep that in mind. And the housing crash of 2008 was so far reaching and did affect everyone on so many levels. We are actually very fortunate in Richmond that during the boom, though things went up in appreciation levels, they never went up to some of the levels that they did in some of the larger cities such as Las Vegas or certain parts in Florida. So when the crash or the housing correction, or the market correction occurred in 2008, and again, just because something ended or happened in 2008 doesn't mean that there wasn't a ripple effect for many years. And I can tell you from personal experience of selling during the Great Recession, I have sold during the best of times and I have sold during the worst of times. And that was definitely the worst of times. So we go into there and there was an abundance of home, and big thing had to do with the confidence of consumers. The confidence was so shaken. And someone described it to me as, Erin, buyers are as scared as a bunch of alley cats. And it was a very interesting way of looking at it, but it was so true. During that time in Richmond and in a lot of the housing markets, yes, buyers could get a great deal on a house because there were a lot more homes than there were buyers. But if any little thing kind of just seemed off or they didn't like something, they were so skittish that it'd be just like they'd run and hide and like, oh, no, I'm not gonna do it and I'm just gonna wait for a while. So let's look at how things are in comparison right now. How is consumer confidence right now? It is very, very high, despite inflation in Richmond, and also despite the interest rates going up. There is very high confidence and people still feel like investing money in real estate in Richmond is one of the best ways to invest their money and to have a place to call home and to find a place to call home where they can at least regulate what their housing cost is going to be every month because they have that wonderful fixed rate, even though the interest rate maybe isn't as low as it was in 2020. Maybe it isn't as low, or not maybe, it isn't as low as it was in 2021. Things are still going up, but they still are traditionally and historically much lower. And here, would you compare it upon the crash is overabundance of homes, interest rates, you might go, well, they were really low during that time. Yes, my friends, but were they really low 30-year fixed safe money? And the interest, the answer to that is no. You might have been able to get this really crazy low rate, but it was an adjustable rate. It was an ARM with crazy terms and balloons. And if you were affected by the housing crash, all of a sudden that mortgage payment that you could barely make now because you've just lost your job or your income has gone down really low. Believe me, when your interest rate adjusts and it goes up to higher than what the fixed rates are right now, much higher, if you can't pay it at the lower rate, how the hell are you going to pay it at the higher rate? So something definitely to consider, that yes, you may see the correlations, but are they truly the same? And let's kind of talk about that again, about the law of supply. We went into the crash, we had an overabundance of homes. But what happened in Richmond and around the country as well is all the building that we were seeing during the boom. Same thing, you're going like, oh, builders, they can't keep up with the demand right now. Here's the difference though. They were building a bunch of homes. They were putting whatever price tag they could put on it. And there were indications that you wouldn't know about unless you were really in the industry, that it started in like 07, that the houses that used to fly off the market and builders could put whatever they wanted on price-wise, all of a sudden they were sitting for a year or two or more because people did say at a certain point, I'm not paying that price. There was a shift. That's not happening right now, even though there is a shortage of homes. There's a shortage of homes because of the last housing crash. The building stopped. The building stopped. Very little was being done. We didn't really see a tick up of things in Richmond and around the country until 2012. And we were already at a shortage. We came into the pandemic already with a housing shortage. And really in Richmond, our last normal years in market-wise in terms of how they were 16, 17, 18, and 19. And none of those were like banner years for our area. They were very level, stable years. So there wasn't an overabundance of homes, but there wasn't an overabundance of buyers either. It was very, very level. And I'm going to correlate that to another time when things were very level, and it was actually pre-boom. That you're actually going to see a lot of the correlations there. So we go into the pandemic and a very level playing field, and all of a sudden this pandemic happens. We have no idea how that's going to affect the market in Richmond, Virginia. In fact, we were real scared. We're like, are we on the verge of a housing crash right then? Not now. It was then. All of us in the industry were worried about it. And lo and behold, a pandemic actually changed the housing market in Richmond. It actually took the seasonality out of things. And if there was one thing that everyone could agree on is that now is the best time to buy a house because interest rates are very low, 30-year fixed, safe money. And when they did that, particularly the first-time home buyers in Richmond, they flooded the market. Remember, we were coming into this time period of there not being all that many homes, definitely not an abundance of homes. You have a bunch of first-time home buyers coming into your market, particularly in Richmond. You're not that many homes. That inventory continues to be depleted. Now, we don't come from a place of lack. I live a life of abundance sort person, and I work with people that are like that too. But inevitably, if you have a bunch of first-time buyers, which is great to get them into the market, but they're buying already a low inventory and they're not trading something up, leaving the penny at the cash register, I guess is how you would keep it. Your low inventory continues to go lower and lower and lower. But you keep on watching the polls in Richmond. Do people feel confident about where they're investing the money? And the answer is yes. So are we at the beginning of a housing crash? Are we seeing signs that are the same of how it was several years ago? And the answer is yes. I am seeing things and talking about things to my buyers that I was years and years and years ago during the boom. Escalation clauses. List price is being almost like the starting bid of an auction, but knowing that most houses aren't going to sell there. Having to talk about to people about how to make their offers more competitive to sellers. Because this isn't called being in a bubble in Richmond and being at the verge of a housing crash. This is called the law of supply. Consumer confidence is very high. Interest rates are still traditionally, historically lower than they need to be. Even though they are going up, all statistics from major predictors, the big wigs all around, the big companies who watch this and then watch the market and go, this is what's going to happen. Everyone is predicting that yes, interest rates will continue to rise in Richmond and around the country throughout 2022. But the rate in which they're going to be rising is going to be calming down. That's important to know. For everyone that's talking about, oh, we're in a housing crash because everyone's going to get out of the market because the interest rates are going up and everyone's going to get priced out of the market and what they could buy before, and it's already having to be competitive, so now it's just further changing how much house you can get. Guess what, friends? The opposite is happening right now. People are realizing, hey, the interest rates are going up, and I know this is still the best place for me to put my money, and inflation is making the rent go through the roof. I better strike while the iron is hot. I need to buy a house. So those people that are in the market, they're not just like calming down and going, well, I guess I'll try it again in a couple years. No, no, no. If anything, they're more excited and determined to get things done, for sure. Our inventory still remains very low. We've never been able to catch up. Back to the builders. Yes, they are building and they can't keep up with the demand right now. However, builders have gotten the point now that unlike before the crash before when they're like, yeah, hey, we're just building these houses and we'll do it for a very little amount invested into the property up front, isn't like that anymore. Even if you're getting a VA mortgage, expect that you're going to be putting at least 3 to 5% down with the builder while your house is being built, at a minimum. They are being very smart about things, for sure. So again, everyone needs houses. The houses aren't getting built fast enough, and there's not enough resale inventory out there. We are looking at the law of supply rather than a bubble. If you have any questions or I've missed something in this talk and you want to know that, I want to answer these questions for you. Please leave your question down in the comments. I'll get back to you, or who knows, I may even do a whole video for you.